So good day everyone, Violence Trader here, and I'll be your friend, your tutor, your host for this particular session. So this is my first ever YouTube content and specifically made for YouTube alone after a long while of decision. I finally come to a conclusion to start uploading my videos on YouTube due to popular demand and for a wider reach, and also for people that doesn't use the other platforms I will drop my videos that mostly use YouTube because almost 90% of people use YouTube, if not 100%, as long as you have a smartphone. So, yeah, and today's topic, I will be very straightforward and elaborate everything. Like I said, I'll be talking about the equal highs and the equal lows liquidity. And these are something, or this is something that most mentors, or your mentor, or where you learn from, didn't tell you about the equal highs and equal lows. And these are something I've backtested, I've learned, and I've traded over my time, over the years, over the months I've been trading. Because these last few months I haven't traded anything. I've just been busy academically. But yeah, I'm done. So I said, okay, fine. I should just come and speak out about this particular thing because I've been seeing some people, they are not like making it the way it's supposed to be. So making them take some losses. So yeah, I'm just here to cover up everything you need to know about the equal highs and the equal lows liquidity. But first of all, we can't just jump into the equal highs and equal lows liquidity. What is liquidity as a whole? First of all, liquidity. So now, the base term of liquidity is every turning point in the markets. Whenever you have an equal highs, I'm sorry, whenever you have a higher high, higher low, higher high, higher low, higher high, higher low, higher high. So now every turning point in the market is a liquidity. Every turning point in the market is a liquidity. Price turn from this point here to this point is a liquidity. Price turn from that point also to the downside, that's a liquidity. Price also turn from the downside to the upside, that's a liquidity. Liquidity, turning point. Every turning point in the market is a liquidity. Every turning point in the market is a liquidity. So now, but we can't just trade every turning point in the market. So that's why we have, or that's why the liquidity section as a whole is divided. Yeah, which we have the inducements liquidity, the engineered liquidity, the equal highs liquidity, the trend line liquidity, and the equal lows liquidity. So now just this is the type of liquidity we have according to SMC. According to SMC, and this is the type of liquidity I trade from or I use when trading. So yeah, but today I'll be talking about the equal highs and equal lows. I've talked about the trend line liquidity. Talked about the trend line liquidity. I think not. I think actually I actually posted it on TikTok, so you can go there. I think one of my pin posts. That's it. I have about 13K or 11K views. So yeah, now let's talk about equal highs and equal lows. Why we're here. So let's quickly delete this. So equal highs liquidity, you might not really say it has a definition, and sometimes I'm not good at this definition, but I can identify it, show you a chart pattern. So that's what I'll be doing here. I'm not good at definition on this particular topic. So equal highs, equal lows liquidity. So when you hear about equal highs or when you hear about equal low, what actually comes to your mind? It means when something are equal. No one is lesser than the other. That's just what I mean by equal. And you can see here, with the skeletal example I drew, you can see I talked about the equal highs. I drew about the equal highs. I drew about the equal lows. Yeah. So now, this now, for example, I drew this for example, like this is a point of interest. It's not actually a point of interest because this is not a chart, but I'm just like trying to like map out something. This is a point of interest. So now price then created, so this is another block, for example. The price then created an incomplete pullback for those I already talked about the incomplete pullback. For those that knows, I've talked about the incomplete pullback here. The price then completed the pullback here. Why is it not complete? Don't worry, I talked about it before, so you can go and check it out. So now, the price created an incomplete pullback here. Then instead of it to come and break structure here, which make it an inducement liquidity. Like I said, I talked about the inducement liquidity and engineered liquidity. Inducement liquidity, when price creates an incomplete pullback, then breaks your low that caused the pullback, then come back for it again, come back with the point of interest. So that's what an inducement liquidity looks like. But this now, you can see here, if price hadn't like created this equal highs liquidity here close to my point of interest, I'll just say these are engineered liquidity because obviously it was 50% more. It went 50% down to this original move that happened here. So now price then came here, 50% of this particular move, then reversed back, then probably tap on the point of interest before selling. But price, instead of coming to tap on the point of interest, just created an equal highs with the previous high, then gave a small reaction, then came, took it out, mitigated with the point of interest, then sold. So whenever you see an equal highs liquidity close to your order block or your breaker block, it's a very, 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 very valid trade. It's a very, very valid trade. You get, and I will be showing you chart examples as we go. Maybe like two bullish chart examples and two bearish chart examples. So for the bearish, we bring come with the equal highs, two equal highs. Then for the bullish, two equal lows. So now let's get. So the second one is the equal high, equal lows liquidity. Equal lows liquidity. For example, we have another block here. Then price came here. Equal and complete pullback. This one also break structure, inducement. So now we're waiting for price now to come back. To come back. Then mitigate our point of interest double back. But instead of price coming to mitigate your point of interest immediately, this was what price did. Price came, created an equal lows together with the other low that was formed, the inducement low that was formed. Then reversed a little, then came back to take out the equal lows liquidity, mitigating your point of interest. And if you're not careful with this equal lows liquidity, you will miss your entry. Because once price is coming to take out the equal lows liquidity, you can react to any point of interest, you can react with the fair value gap. If the fair value gap is closest to it, it might react for the you might react from the fair value gap. If the other block is closest, it might react from the other block. So depending, if you're not like watchful enough, you miss anything. This type of setup, like you are going to miss it. So now let's go into the chart. Let me just give you chipping one or two examples. Then I call it the session. I will try as much as possible to about like elaborate everything. Yeah. So this is okay. Let me start from USDJPY. So the one we all traded December. So so what's that from? That was obviously where I took the trade from. So now on this particular day, 8th of December, I can't forget. I had this setup. I had this setup. Price already reacted from here. But I didn't see this reaction though. I don't trade like that. So what else the price did? Price now was now in a trending manner. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. And I talked about how to identify your market share shifts. It's also my previous videos on TikTok. So yeah, this was the last high and I created a low. Then the high got raided out. So now we're no more bearish again. And I'm bullish. And now price is going actually for this trend and liquidity to be swept. So I actually thought that price was going to go once, but at the same time, I had my order block here, my sweep of liquidity, my incomplete pullback here, broke structure. So I was now waiting patiently for price to come to my point of interest. Then obviously we buy. Then we have had this price then came. Instead of it to like keep on dumping like this, mitigates my point of interest, then keep on. Price didn't do that. What the price did, price just created an equal lose liquidity here, then reversed a little after giving my market short shift, reversed a little, then came to my point of interest. Then we bought. Then where's our TP? Next draw liquidity. So that's why I say equal lose liquidity, equal highs liquidity, close to your point of interest. Equal lose, equal highs liquidity, close to your point of interest. It's a very valid one. And if you're not careful, no matter the type of point of interest, you will miss it. So now let me show you for the breaker and for the equal highs liquidity. Let's go to the US 30. US 30, I also missed this by, I think, due to broker manipulation. I'm sorry, this sell due to broker manipulation, but I got a re-entry also. Got a re-entry also. So now let me go to like the 30 minutes because that was the 30 minutes breaker block for the first sell. Then the second sell, I cut it. But yeah, bravo to me. So yeah. Then we are bullish here. We were bullish. Price was just printing higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. Then we switch where we change the market delivery for bullish now to bearish. But this was obviously the last low that created the high. Then now I was bearish, but not long term. I was just bearish to here. You understand? I was bearish to here as of then because I haven't confirmed the bullish, like the bearish structure yet. That we're going because this pair is tricky, very, very tricky. So, but what I just did is that okay, price have already reacted, show you some reactions here, these, then break here. Okay, fine. Then I went down to my 30 minutes time frame. Then I saw my breaker block, my indecisive candle breaker block. So yeah, I mapped out my breaker block. Then I mapped out the incomplete pullback closest to it first, which is yeah. I mapped out the incomplete pullback. Then the incomplete pullback broke here, created this week, did all these, then finally came and now created an equal highs. So I was like, okay, fine, fine. I just saw my equal highs. I know that oh, the valid trend. We are going to buy that. So we are going to sell now to my take profits. Obviously, it might take days, it might take, but definitely it's going to sell. But price had other plans. You understand? Price had other plans. I think my broker self had other plans. It's not even price. My broker had other plans. He did not mitigate me. Yeah. I see just a little to tap in then. Price ignored me. Yeah. Price ignored my point of interest. So when I selected from the weeks, because it's an indecisive candle breaker block. Yeah. Then now my that's why I said if you're not careful with this, the way you pick your point of interest, whenever you see an equal highs and equal lows liquidity, you will miss your entry. But at the same time, I missed this particular first entry here. After missing the first entry, then I'll say, okay, fine. As long as price haven't taken out, this is my next round liquidity. And it once it breaks structure, I'll be looking for another setup ASAP, like as soon as possible. Then I was still waiting, observing. Yeah, but I wasn't on the charts. I was just observing it once. Then I went to the 2 hours time frame. What did I see? I saw an actual PY indecisive candle order block. Yeah, the Y price created the order block. Then did this created an equal highs. This is not just double equal highs. This is triple equal highs. So triple equal highs is like more like a strong magnet like of liquidity. That price will definitely come there. This is not just two. This is three. And you can check this out on the chart or any other charts, like any other pair. Whenever you see three equal highs close to your point of interest, your other block, your breaker block is a very, very valid one. So why did this? I think this was my first time trading this on indices. I said, okay, fine. I'm banking on this. As long as first of all, we already have a break of structure now, price is still continuing the trend. And I know that obviously this is very, very sure. I'm 100% sure that price had no business coming back here again because I've already taken out what it came for, which is liquidity. Price, you know, actually send your PUI. Price just comes there for liquidity. So now, which price have already taken out here. Price have taken out the liquidity. Then equal highs, one, two, three. I had my sell limits here. Then price just came. Price just came. Mitigated with it. Then we sold. I was just selling, selling, selling until to come my next join liquidity. And price kept on selling and selling and selling and selling and selling. And selling and selling. For now finally flip bullish, which price haven't given me an entry yet. So but we're going to this high. Obviously, we're going to the high. But for now, I'm off for this pair on this particular session. Then now let me look for, I've talked about one bullish, one equal lows, one equal high. So now let me look for the next, I think equal lows or equal high again. One more, one more, one more, one more. I'll look for a valid one. So once you just see it, you can easily identify it. So now this was the 3 hours time frame in this pair. I didn't trade it. I did not trade it. I did not trade it actually, but yeah, at the same time, it was valid. I was not out of the charts because of I had the miss entry here, which means by a few pips. I think it mitigated with the incisive candle breaker block. But I was waiting for the 1 hour order block around here. So once it just missed my entry, I wasn't like interested in the pair again. Yeah, I wasn't interested in the pair again. So if I had seen this, I would actually take it definitely because this is an incisive candle here. Incisive candle order block here. You can see it. Let me zoom in so you can see it. Incisive candle order block on the 3 hours time frame. Then price greater than equal lows. I'm sorry, equal highs liquidity close to it. Understand? PY incomplete pullback that breaks this low that calls the incomplete pullback here. Price breaks it. Then greater than equal highs liquidity close to my point of interest. Then pushed back, mitigated with it. Then we had the dump. The price dumped to here before it finally started buying. But at least you could have caught some, I think at least 1:10 risk to reward. You could have caught some trade here. Obviously, by taking this here, then this obviously this did like 12 hours before reversing. It did like 12 hours before reversing. Yeah, did like 12 hours before reversing. So yeah, I wasn't like on the charts. I was on the chart then. At the same time, it was a nice ride. So now let me look for one more example of the equal liquidity. So yeah, I think USDJPY. USDJPY. So when it comes to USDJPY, so now USDJPY, yeah, we had this trend line liquidity, then breakout. Yeah, trend line liquidity and a breakout. Finally, then price came to this other block here. I did not take this trade. Why? Because of no inducement, but other criteria concerning an order block was met. But it wasn't that valid to me. So now price gave me confirmation entry, which is this other block that has my whole criteria. And aside the criteria I had was coupled also with the equal lows liquidity close to it. Equal lows liquidity close to my other block. Very, very valid. And it wasn't like a few pips if I could have missed this trade. It just tapped in. My broker mitigated it, like started going immediately. Yeah. I see other block, equal lows liquidity close to the other block. Very, very, very valid. So now I took my profit at this next round liquidity here. But I know deep down in my mind that price is going to go and clear this whole triangular liquidity. But to be safe for the like re-entry, sake of re-entry, I take my profits at the next drawn liquidity. You get at the next drawn liquidity. So I by looking for other entries. So yeah, what I'm trying to say is whenever you have equal load liquidity, and now show you check examples of how it looks like equal lows liquidity or equal highs liquidity close to your point of interest. Very, very valid. So So I think that will be all for now. So see you guys on the next class. Peace out.